Good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, May 26th, 2022. It was an interesting day in that we did not have serious selling in the NASDAQ for about 6 hours. So almost within the last hour or so, the market decided that it would put in a little bit more of a retracement. And then they kind of tried to zip it up for the close. It was interesting because as I had left it yesterday and discussed that if the market's intent was to complete a fourth wave, this is what we needed to see to give confirmation that that was the intent. And a lot of that did come through today, both in terms of the structure and just the reach that the market did make. But here we are. I made a little bit of a label change on the daily chart, and you may notice that I've moved the minor wave one from up here to down here. It still makes more sense. And as I have been saying all along, I've been running both of those counts congruently and change them up when right now I'm going to favor this versus the other. So and because by doing that, it tightens up this fourth wave and puts it back in a realm of reality rather than shooting for the stars at this stage, but still managing to get itself closer to 12,600. That remains for me the goal of this fourth wave. But now I like it and it's cleaner, and this fourth wave would find its end point around the end point of a fourth wave of previous degree, one lesser degree, excuse me, and that would be the minute 4. So let's drop down to the hourly chart and take a look at what's inside all of this. Again, interesting because I'm getting that move that I wanted to see in the triangle, but it's not really a triangle. So I'm not sure other than an A, B, and this is going to be the C. And I'll figure out the internal because there was quite a few there's a lot of noise there. And so, but it will work out. And now it's picked up. And more importantly is that the structure remained 3 waves. Within that C wave, there are always going to be 5. So you have an A wave, a B wave, and a C wave. We already figured that the alternative that it could be a zigzag likely wasn't going to fit because it kept finding resistance at the 200, and it needed to be a zigzag. It needed to break above, which it did, and it did in grand style, and it just kept going. So now that does fit better. So the other side is back on as well. And now the 20 has gotten above, this is on the hourly, the 20 has gotten above the 200, and the 50 likely is going to get real close. If not, go ahead and break above. Because from here, we could do another 300 points, 300 to 400 points. And they could do that tomorrow. Now today, like I said, here is our open right here. So that's 1, 2, 3, 4, 5 hours. 5 hours of green hourly bars before in that last hour, or from 2 o'clock, excuse me, from 2 o'clock into the close, we did see. So we had 1, 2, 3. So we had 3 hours of downside after 5 hours of just straight up. And of course, the down was not as severe as the up, or didn't cover as much territory. So I don't really have anything to put in as a change in terms of that I'm expecting it to blast through these upper numbers, because I'm not. If it does, we'll figure it out. And again, if it does, because folks, I'm a day trader, so I'm going to trade what's in front of me. I'm not carrying a position. So even though I may consider and feel that it needs to go down. If it blasts through, then I'm going to have to listen to the market and trade it. It doesn't mean that it's not going to fall. It's just at that particular point, no. So remember that when you're trading and you get your signals, which this market did give today, it did break the 200. It kind of came up, went above, came back down, came up, tested, went back down, and then came back and just went through it. So ABC up. Here are the resistance is 12,551. But we also have additional resistance right above, which is the 12,594. I would prefer to see it clear 12,600. Doesn't have to necessarily get all the way up to here. But that was topside. Topside was 12,900. Now it's been lowered a little bit to 884, 85. But I think 12.6 is in the realm of reality. And you can see it would be a pretty strong rally from here. Tomorrow is expiration. Tomorrow is an expiration before a 3-day weekend. Markets are closed on Monday in observation of Memorial Day. So I think there's a lot of position squaring was going on today because traders are going to make it, instead of a 3-day weekend, they want a 4-day weekend or longer. So many traders may have already been gone because there's sincerely, when they were buying it, there was a total absence of sellers. That's why it just moved and it just tacked and went. It's like the sellers are like, yeah, we're done. Okay, whatever. They were already out of the office. So who knows who hangs out tomorrow? I don't know. But we have upside potential. Downside, it's going to be the same thing. The market should fall in the absence of buyers, just like today in the absence of sellers. So if the sellers are in control tomorrow and the buyers are like, yeah, whatever, boom. Then it's going to break back down. It's going to break there. It's going to break back below the 20, the 200, and then the 50, wherever that 50 may end up. It will break all of these. And that's going to be a stronger signal on the hourly chart that we are headed down. Price support, 11,672, 11,576. And then we have the low, still 11,491. Again, if this completes the minor four, then we're going to turn and we're going to start heading down in a minor fifth wave. I'm going to go back out to that daily, because what we will be finishing then is the intermediate third wave. Here's the intermediate 1, 2. We're in the third. This, if once it tops and we start heading down in a minor fifth wave, then I'm expecting it to go as close as it can to 10,000, if not below 10,000. There are a lot of people that might disagree with me, and that's fine. But I believe in this minor fifth wave that it should do it, but we'll get a blast off of the anticipated low. So where I'm thinking, wherever this comes in, it will blast in a intermediate wave 4. So because what this will be finishing on the way down is the intermediate third wave. It sets us up for yet another bounce on a larger degree. And then that will measure out. So because we need to get this bottom in first before you can start to estimate where that fourth wave should go. It's going to be bigger because it's a degree higher. And even if we don't go sub 10,000 here and we do that intermediate wave 4, there's still an intermediate wave 5. So no matter what, within this corrective cycle, and I'm up here on the primary degree, to put in that primary wave A, we still need at least a trip down to that, in a minor wave 5 to finish the 5 waves down off of 15,368. So we still need that. Once that is in, again, running congruently, I have been talking that if this is not intermediate wave 1, it would be intermediate wave A, this would be intermediate wave B, and this would be intermediate wave C, wherever it ends up. Now, to call that early, I don't do. because of the stack that of degrees that are correcting here. So based on that, I feel that we're in a much longer term corrective phase that many people don't agree with, but that's what makes a market. And because right now we're doing the intermediate degree to create the first leg down of this longer term correction on a primary degree. So if you within Elliott, you kind of got to understand it is building blocks. And I know it's very frustrating. So just take it to mean that we still have additional downside that may put in a short to mid couple of months low, but I'm not going to know right off the bat. It should take off like a bat out of hell, just like these did. But it's going to be on a bigger, it's going to be more on this level. Okay, this is intermediate. I'm looking for an intermediate 4. And to be honest with you, this was a zigzag. So 4 is likely going to be a flat or a triangle. And then we go down again. Okay, so tomorrow though, expiration could be slow and still put in direction. Just like today, truly for a while, there just was no interruption to the buyers. So you really did need to play from the buy side. And I did not play all of it from the buy side. And so my apologies to those that, that saw that. But in any case, I do think that when you can establish even that hourly trend or 20-minute trend, or you've got some space between your moving averages or between your resistance points, play it. It was not that it was whipping around. It wasn't. It took its time and was very consistent and just up, pull back a little, up. So even in terms of like looking for a smaller pullback, that was tough because there weren't many today. So tomorrow, if that continues, you'll get the signals because your moving averages will begin to all stand in agreement for the direction that it's going. Right now, still a little mixed, not bad, but a little mixed. But as you saw, when we went down on the 30, all in alignment to continue higher. Right now on the close, all in alignment to continue higher. On the 30-minute, on the 15-minute, same deal. Starting to cross the 20. So you can see how it creeps out and you'll start to see your change. Starts to come through these moving averages. Now, you could be watching on your lower levels even. Here, it's a little bit like you got the 20, the 50, the 4 and the 8, flat as pancakes right here. It's almost like it's forming like this is a snake. And it's a cobra and it's reared back and ready to strike. What direction? We don't know. So just be on alert, and trade effectively and trade using moving averages. And it could be very, very quiet and flat, which is really don't trade, or you can get some good moves. It is expiration. All right, so that's it for today. The next update will be on Sunday, the 29th. I believe it is the 29th. Hold on, I need to check that. Yes, Sunday the 29th. I will make an update when globex opens. I believe globex will open. And otherwise, have a great holiday weekend and have a great trading day tomorrow.